A lot of manufacturers are turning to credit insurance as a useful tool. Well, here with me to talk about that subject is Fabrice Desnos, the Chief Executive of Euler Hermes in the UK, which is a subsidiary of Allianz. So why is credit insurance a useful tool?
Well, credit insurance is an insurance policy that effectively insures clients against the risk that their own corporate clients don't pay them when they're trading with them on credit terms. And businesses very often forget that when they provide insurance credit to their clients, they are providing them with interest-free credit. And we are helping them, effectively ensuring that they can recover up to 90% of those debts.
And so when bills aren't paid, what do you step in and do?
Well, first of all, we are helping our clients to identify which clients are creditworthy and which are not, and effectively at the very beginning identify their credit policy according to their clients' creditworthiness. Then when they're not getting paid, we will link with a network of our debt collecting agencies around the world to help our clients recover their money. And if everything else has failed, we will insure and we will pay and indemnify our clients against the loss. Like I said before, up to 90% of that loss they can recover with us.
Now, what are the risks to companies that don't have credit insurance?
Well, we can trace a lot of corporate failures to the failure of one of their large clients. So trade receivables tend to represent up to 30–40% of companies' balance sheets, and one particular client defaulting on payment can be a very frequent reason for a company entering into difficulties. So we're ensuring that those clients, our clients, don't put themselves at the risk of themselves going into difficulties because their own clients can't pay them.
Is it in manufacturing particularly, or in any other sectors, that they need credit insurance most?
Credit insurance is particularly relevant in the manufacturing sector because from the design phase to the conception and the build of the goods, it can take a very long time, even before companies can raise an invoice. So companies in manufacturing sector will be on risk for a long period of time until they get paid. And a sale is not only ever a sale when it is eventually paid. So that's indeed particularly relevant in the manufacturing sector.
So obviously you provide cover for companies trading in the UK, but do you also cover exports to all countries in the world?
Yes, we do. We do cover UK companies dealing with all their clients around the world. First, because it's not always very easy to collect money overseas. And secondly, I think also information is not always easy to get about the creditworthiness of our clients. The clients who work with us know that they can trade with their clients in the knowledge that we will have vetted their creditworthiness.
Now, I guess the only thing putting companies off getting credit insurance would be the cost. So what are the costs involved?
The cost is an insurance premium. It varies vastly depending on the size of the business, the type of sectors, which countries you work with. There's not one easy formula, but it's usually tailor-made solutions that we will adapt to the needs of the clients.
Now, is it a worthwhile investment? You would say yes, I'm betting.
Yes, well, you mentioned an investment, and I think it's a worthy word for this. Our clients, when they work with us, we will help them identify those clients where they actually can increase their sales towards or can grant credit. And in that sense, that can be a worthwhile investment.
Is credit insurance only available to companies of a certain size?
Yeah, it's available to companies of all sizes, from companies turning over a few £100,000 a year to very large multinationals with operations in multi-countries.
There you go. Well, Fabrice Desnos from Euler Hermes, thank you very much.
Thank you.